Today we're going to be going over IRS Form 3921. This is the tax form that's issued when the recipient has exercised an incentive stock option under Internal Revenue Code Section 422B. So what does that mean? If you participate in an employer-sponsored incentive stock option plan, and you exercise options during the tax year, you can expect to receive this tax form. You will not receive this tax form if you've only been granted stock options but chose not to exercise them. So let's briefly look at this form. The first thing is that there are 4 copies of this form. There is copy A, which goes to the Internal Revenue Service Center. As you can see, this is red so that it stands out a little bit for the taxpayer. Copy B is the version that the employee receives. Copy C is retained for the corporation's records. And then there's a 4th copy, if necessary, for the transfer agent that's actually in charge of administering this stock option program. So just to keep it simple, we'll go back up to copy B, the employee's version, and we'll walk through. First, we're going to take a look at the left-hand side. The left-hand side contains the transfer's name, address, to include city, state, and zip code, the taxpayer identification number of the transfer agent. If the transfer agent is not the corporation, then you can expect to see a different name here than the corporation's name. Employee's tax ID number, the employee's information, all of this should be correct because this is going to be the form that gets sent to the Internal Revenue Service. And if there's an account number associated, you should see that here. On the right-hand side, you're going to see 6 blocks. Block 1 is the date that the option was granted. Block 2 was the date that the option was exercised. These do not have to be the same. As I mentioned, you could have received stock options, say, on April 1st of a given tax year. And if the entire year goes and you've not exercised that option, you shouldn't receive this form. But if that option is exercised, then you would expect to see this form. Not only that, but you would expect to see a unique version of this form for each different date, either here or here. So in block 1, if you decided to exercise 3 years worth of option grants, then you would see this form 3 times with a unique option grant date in box 1. Conversely, if you received a bunch of options, but they were all on the same date, and you chose to exercise them on different dates, you should see a unique version of this form for each date that you exercise that option. Why? Because the price changes from day to day. So if you go through the rest of this tax form, it'll be a little bit more clear on why you would need to record each date on a separate form. So block 3 is the exercise price per share. This is the price that your stock option was exercised at. So if you had exercised 100 options and each option allowed you to buy a share of a stock at $30, then you would put $30 here, and you would put 1,000 shares here in block 5. On block 4, that is the fair market value per share on the exercise date. And the reason why that's important is because there is specific tax treatment for the difference between the price you paid and the fair market value of that price. So those are going to be recorded here. And then on block 6, simply if the corporation is different from the transferor, so if this information on the left-hand side is not the company's information, and there is a unique entity that is your transfer agent, then the name, address, and taxpayer identification number of the corporation whose stock is being transferred would go here. For example, Home Depot Corporation their information would go here, while their transfer agent, which I believe is ComputerShare, that information would go here. If you have any more questions, please check out our article. Simply go to teachmepersonalfinance.com, type in 3921 in the search bar, and you should find our inclusive article. Thank you.